So thank you, Damien, and thanks everyone for tuning in either online or in person today. One of the themes today will be uncertainty, so just to clear up, Michelle is the one online and I'm Aaron, the one in person. So I'm hoping you can hear us, Michelle, somewhere. I think we get you tuned in at the right time. So this work, I should say, is also being supported by Professor Hanlin Shang of Macquarie University and Dr. Francis Huey of the ANU in Canberra as well, as part of Michelle's PhD. So overall, this research concerns the potential impact of climate change on mortality, but particularly in the context of life insurance in Australia. It's very early stages, just considering a few things that we think isn't covered so much and particularly in the academic literature, which we're trying to give some messages into that through this research. I would say too, there's been quite a number of presentations on similar themes so far. They've all been really, really impressive for those who've been giving them, and I'm sure the following ones will be really useful too. So we'll take note of those things. It's obviously a theme of the day, but they've been really good. So thank you to those who've done those. Okay, one question about climate change is what it might mean for life insurers in the Australian context. This means our focus is on life insurers who primarily manage risk products rather than savings products, which might be the case in other jurisdictions. We're also interested, however, in what longer-term climate change impacts might suggest for mortality hedging strategies, such as when managing both death and survival policies, such as annuities. I'll chat through the first two items on the outline, and Michelle will talk through numbers 3 and 4. If she does tune in, which she is tuned in, which will come in at the right time. Okay, so three main categories of risk, or three predominant categories of risk are discussed in studies out there to date. These are things I'm sure you're all familiar with: physical, transition and liability risks, and we've heard a lot about those already in previous talks. An understanding of physical risks gives a basis to estimate claims risks for a life insurer, based on one of two things, either short-term event-type impacts or longer-term changes in mortality that do arise from or are projected to arise from future climate change. However, estimates of both these things, the event-based things and longer-term impacts, are of course, I had in my notes earlier, relatively speculative, but I should really say highly uncertain. I think we all know that. And that's certainly what we're seeing and what we're looking at. So this uncertainty, this theme is also, of course, coming up in earlier presentations. Transition risks, from what we see, they mainly, not exclusively, but mainly impact the asset side of the balance sheet. We don't really have anything at this stage too concrete to add to these risks, but we do include a nominal impact on asset values in the work that we do. This really, though, is not to give a conclusive take home about what transition risks do to assets. It's more just to encourage future studies, including our own, particularly in the life insurance context, to fully consider both asset and claims liability risks in any discussion of climate change impacts. Legal liability risks are of course also important and are noted in the literature, but we haven't made any attempt to address those here. We have considered a range of potential impacts and applied them to a hypothetical life insurance portfolio in order to get an appreciation of the financial impact on the claim side. For this hypothetical or synthetic life insurance portfolio, we consider YRT or risk-only policies as well as annuities, as mentioned earlier. And although the demographic composition of each portfolio is reasonably aligned to what we think a typical life insurer would have, there's no particular calibration of note between the relative death and survival exposures between them. We're just looking at the principles of what death and survival policies, how they're exposed in the future. And we've just included both really to demonstrate the potential benefits of a mortality hedge in a world where we know that mortality risks are changing. Our overall motivation is, as all good things should be, relatively straightforward. Life insurers face changing risks, including those arising from direct and indirect impacts of climate change. The European Insurance and Occupational Pensions Authority, if I got that right, suggests a range of stress tests, which we adopt in general terms to assess the impact on the hypothetical life insurers that we've adopted. The principles of these tests are to better understand the underlying financial risks, to define the scope of stress testing, and adopt the use of relevant scenarios, including event shocks. Of course, assessing potential responses in the future to the financial outcomes of such stress testing is also important. We don't attempt to model future responses. Of course, that's an ongoing thing that would actually occur in reality, but in terms of modelling the future, that's not something we've yet thought about doing. Okay, we have a particular interest amongst all this in the relative impact or importance, if you like, of short-term stresses versus long-term impacts. And Michelle in particular will talk about some of the short-term stresses that we have looked at in some detail. Although we'd like to delve deeper, as mentioned, into the impacts on assets held by a typical life insurer, our main focus for now does reside on that liability side. This is because the literature out there has more to say on liability risks for life insurers, and the link between climate change and claims liability risk is the more direct thing at this stage that people are giving attention to. But of course, that said, we do not think that the impact on the assets is any less material in the long run. Transition risks are real, and the approach to consider both assets and liabilities in tandem is something we're trying to give a bit of a nudge to ourselves, and I guess encourage the academic side of things to be across in time so that industry gets a bit better informed on the, I don't like using the word, but the holistic impact of climate change, both assets and liabilities considered together. Okay, here's our two life insurers. Insurer A is about risk products, Insurer B is about annuity products. The mix of assets, and happily be corrected, but the mix of assets is what we understand would be reasonably typical of a life insurer with only this portfolio of products. The stresses that we apply to these portfolios include temperature and air pollution stresses. For a short-term event in the next 12 months, and Michelle can go into the detail on these ones if we get time, but for a short-term event in the next 12 months, both of these give mortality increase of around 2%, I was going to say 10, sorry, 2%. For a longer-term impact over the next 30 years, the stress is based on an SSP, the Shared Socio-Economic Pathway. We selected pathway number 2, which is a middle-of-the-road scenario, and overlaid that with weak and strong climate policy responses. As with all things, we had to make a few necessary assumptions. One in particular is that the impact on insured lives would be the same as what the impact is on population. Of course, most studies out there talk about population impacts rather than insured lives impacts. We've assumed they are the same thing, which we think is reasonable and is aligned with some other studies as well. I don't think being insured means you can run from a bushfire faster, but who knows? So in a nutshell, we've got some of this under review right now, but this is just the higher level findings. Short-term shocks are important, but they are swamped by longer-term trends and risks. In a world of more uncertainty around future mortality, the value of a mortality hedge will remain important, and perhaps more so as possible futures diverge, or the future variation around future outcomes is greater. More research, as per previous presentations, more research is very much needed. Our sense is that much of the work being done is in the very early stages, but what we would say is that balance sheet impacts need more work. So lots of good stuff going on either side of the balance sheet. Putting it together is probably a piece that needs some attention at some stage. For example, strong climate action is a good thing and will improve or may improve mortality risks, which of course is really good, thankful for that, but then the transition risks on the asset side would be greater. So considering those things together may be quite informative for life insurers in the future. This all points to the actuarial toolkit of risk management, constant monitoring, control, adaptation, being critical to the future in this sort of work. I promised Michelle I'd go for 8 minutes, I'm up to 10, so I'll go to Michelle now to dive into a bit more detail from some of the early research.
Great, thanks, Aaron. Thanks so much for the introduction and also the guidance throughout these projects and pieces of research. As Aaron mentioned, we'll now explore a couple of ways where we've looked to investigate the impact of climate risks on mortality in particular. A starting point here is to, as Aaron mentioned, help life insurers make decisions to manage and mitigate these risks a bit better. So I'll cover off maybe 1.5 examples. Firstly, an earlier case study, we looked into investigating different mortality forecasting approaches, specifically in the context of understanding the impact of air pollution on mortality. And then I'll go into a bit of detail in terms of the next steps, what we're looking into at the moment, and how we can consider mortality forecasting by cause from a compositional data analysis perspective. So maybe if we take a step back, we can consider climate-related physical impacts on mortality into 3 large buckets. So one, you have your event-based bucket, which increases in mortality are driven by increasing frequency and severity of extreme events, such as floods, cyclones, bushfires. Number 2, you have your trend-based bucket, where you have slower moving changes, such as changes in temperature or sea levels. And then number 3 is kind of the interaction of the two, or second-order impacts, so such as, those vector-borne diseases or food shortages as a result of bucket 1 and bucket 2. So if we start with air pollution and mortality, then we turn to the climate-related risk impact emerging from extreme events. Based on what we've seen and in the literature, there's a clear observable impact on mortality from climate change. So for example, the Australian bushfires, which have increased with severity and have given rise to unprecedented health issues. We've noticed this in California as well, where wildfires have grown in frequency and severity. And even more recently, we're seeing these effects in Europe. So places which do not typically have summer wildfires are experiencing them for the first time. So this being said, since these are event-based impacts and often short-term events relative to if you consider a 30-year projection horizon, there's fairly limited empirical research to link these extreme events impacting air quality to applied settings. So moving on then, I'll be brief because I know that time is running out. We want to understand whether these changes in air quality, as measured through PM2.5, which is particulate matter with diameter less than 2.5 micrometers, have an impact on excess mortality. So we'll start with some very basic aims. One, to understand whether there even is a modeling relationship between air quality and excess mortality. 2, having established whether there's a relationship, we want to then compare established regression techniques with machine learning approaches or something in between. And then 3, given that we know that these are events that cause changes in air pollution, we want to understand whether such events trigger structural breaks in either PM2.5 concentration or mortality. And so what I mean by structural breaks is, for example, when you have a bushfire, the level and the variance of that time series trend of PM2.5 concentration, for example, changes such that if you were to use that data to forecast something, it might not work, or it might produce a forecast that's not quite accurate. And that's what I mean by point 3. And then to start with, we've considered excess mortality as the excess over the actual prior 5-year average mortality. This approach has been used in other statistical reporting, so Office of National Statistics, and in literature to understand changes in time series behavior. Briefly, so here are the results or the outcome of our study. For modeling purposes, in terms of the data that we've used, we've looked at environmental and mortality data between 1999 and 2019 for counties in California. We picked this data set because, one, it's relatively recent. There are known wildfire events observed over this time period across different counties in California. And 3, it's granular enough that we can play with it and we can have a look at, the county level interactions. So if I go back to our 3 aims that I introduced just now, Firstly, from this data set, we concluded that the level of air pollution indeed has a statistical relationship with mortality. We compared 3 models which are on screen here. So 1, the linear model, 2, a generalized additive model, and 3, an XGBoost model, to investigate whether a more sophisticated modeling approach gives a better forecast. The results here indicate that probably not. The GAM model, which is fairly established, actually produces a very slightly better forecast when comparing your out-of-sample errors. And then interesting to note with this specific data set, though, when we look at the machine learning approach, the model actually overfits to the data, which was quite interesting to kind of figure out for us. And then just moving on to maybe a brief recap of the result here. So what we've shown on this slide is the outcome based on the GAM forecast, and it shows the partial effects of PM 2.5 on excess mortality. So if you can see, I don't know if it's big enough, but the tick marks along the x-axis are the observed data points, and then the shaded region is the 95% confidence interval. So as you can see, as your observed data points become more sparse, your confidence interval gets really wide. The forecast here doesn't really tell us too much, except to say there is a relationship. So we want to know why, why it doesn't really tell us that much of an exciting story. And that brings us to our third point, which is structural breaks. And in our data set that we used here, we indeed identified structural breaks in both PM 2.5 time series and mortality. Interestingly, the structural breaks in the PM 2.5 time series align with recorded wildfire events in California by county, which is what we expected, so great. But only some of those structural breaks in the mortality time series also align with the breaks in PM 2.5. And so it kind of confirms our motivation to want to understand these events better and want to understand what it actually means for life insurers from just a purely mortality perspective. So maybe just to recap, and before moving on to the next steps, we've summarized the outcomes according to each of the 3 aims at the outset here on the slide. But given these findings, I think the bigger question is, well, what does it mean for life insurers, both in terms of trends and events? And so now I'll move on to next steps and the work that's in progress. And I think the motivation here to understand it a bit better, given the not so great forecasting results, and what can we do to make that better? So other ways we can consider the mortality experience, so in addition to your typical factors like age, gender, smoker status, is to investigate causes of death and then how these factors change over time. In the academic literature and earlier research, we've seen that using a compositional framework, so based on death densities to forecast mortality by cause, improves the overall forecast, particularly as it reflects the dependencies between causes or between subgroups of mortality. And the improved forecast accuracy of cause-specific life table death counts is important to help us understand incidence, and it can provide insights into the impact of external drivers, so such as climate-related risks, and investigating and developing methods to capture these mortality trends by cause are an important first step then for us to kind of develop a better understanding from what we've seen to date. The challenge, though, with modeling cause of death data is producing coherent forecasts, given that you have competing risks between causes. And so one of the ways to do this is through compositional data analysis, or CODA, which is an established statistical method to analyze compositional data. It's been used quite extensively in geology and chemistry, where the data is defined as a vector that sums to a constant value. So if you think about it in the context of forecasting mortality, you can consider deaths by cause, summing up to total deaths in that year for that particular age band as a composition. But the issue is now your data has a constraint, it has a sum constraint. And so whilst it's good to reflect the dependency between causes, it also presents an issue in terms of, well, how do I forecast using constrained data? The main thing to know about CODA is that because of the constraint, we first need to transform the data so that it's no longer constrained, before we can do all the fancy good stuff like fitting mortality models and producing estimates of coefficients and things like that. So there's a fair bit of literature and research on mortality modeling. I won't go into that now because I know I'm very close to being out of time. But what's interesting though is the transformation. So by comparing different methods to transform your compositional data, we do get different mortality forecast outcomes by cause. So you can think of CODA as a framework to model and the transformations as like the wrapper around this framework. So it wraps around your selected forecast model. You can use something as basic as a Lee-Carter model or something a bit more sophisticated, but essentially you have this transformation that wraps around it, and the choice of the transformation matters. I'll finish on kind of just summarizing CODA a little bit and the transformations. There's two main approaches that we can use for statistical analysis in the compositional space. So the first is to ignore the constraint altogether and forget about the transformations, forget about the whole wrapper. But the issue with this is that you might get nonsensical results, which I have in the past. So you see things and you're like, oh, why is that projecting a negative proportion of deaths? And it's because the transformations are very important. The second way is to transform the data, and typically in literature, log ratios have been used to then enable you to produce these statistical forecasts. One of the interesting things about using log ratios, particularly with mortality data, and when we're looking at causes that are emerging over time or for older ages, is that it doesn't work too well when you have zero counts in the data. So one of the points of interest that we've been looking at is how do we deal with zeros in the data if we want to use a compositional framework. So I guess that's kind of where we're heading to try and develop this understanding a bit better. Again, I know I'm out of time, but I'm very happy to discuss anything in detail or in the Q&A as well. Yeah, we hope that, you know, based on this and out of this research, we'll get a few more answers and a better forecast when we're looking at mortality from a climate risk perspective as well. So yeah, thanks.
Thanks, Michelle. Is this microphone working? Sorry. Yeah. Thanks, Michelle. That was great. I did also want to say that Michelle's made an exceptional effort to be presenting to us this morning. She's actually presenting to us from the UK, believe it or not. So I don't even know what time it is over there, Michelle, but probably I think 12 a.m. something like that. So well done.
Yeah.
Thank you. Thanks, Aaron and Michelle. That was fascinating. One question I did want to ask is you showed two different life insurance portfolios, A and B. One was a YRT risk type portfolio, one was a annuity portfolio. And Aaron, you mentioned that short-term impacts from climate risks could generate potentially even a plus 2% change, which I would imagine would be enough to put a small dent in the forecast profit of a life insurer. Was there any, what's the direction of the correlation between life insurer A, life insurer B? Like I was thinking about mortality hedging, were they offsetting signs between A and B?
So Michelle, jump in if you want to, but definitely offsetting. But we didn't calibrate the relative exposure. So in terms of dollars, you know, if you had 10,000 YRT policies, I'm not sure how many annuities you'd have to offset that, but it was more just the principles that there is offset remains there. And particularly with changing risks, the offset seems to be perhaps more important than even in a steady state, is what we're looking at. I don't know if you want to add to that, Michelle? Or?
No, I think that pretty much covered it. I think it was quite interesting when we found that, I guess, with calibrating the risks based on different stresses in literature, that the hedging effect became more apparent, to your point, with the uncertainty in there.
Oh, and just to add to that, one of the stresses was age dependent and one wasn't. So, but now I've said that, I can't remember which was which. Jump in, Michelle. The heat one was non-age dependent, yes. and the particulate matter one wasn't.
Okay, I might just try and quickly deal with some of the questions that are coming through on the app here. Thanks for all submitting these questions as well. So what do you think about mortality, morbidity risk, TPD and IP, and climate change?
I'm looking at Michelle here.
Yeah.
Related, I would say related, absolutely. Yeah, but you go, Michelle.
No, agree, absolutely. I think it's an area that, I mean, we've had discussions recently about this as well, and how we can get a better understanding about the more morbidity risks. There's definitely interactions between the two, but there's potentially also other issues around attribution and considerations on how much of the increase can we actually attribute to climate risks, and then if we were to incorporate it into the projection, what are we actually projecting as the risk factor here? So there's lots of interesting things to think about, but definitely related, yeah.
And I think Michelle's looking at the possibility of getting access to hospitalisation data, but whether that is a good proxy or not to the morbidity risks in TPD and other things, that's another question, but definitely related.
Okay. Another question that I was interested in to see here was, Michelle, you talked about the attempts to establish links between mortality effects and PM 2.5 index. There's a good question here. Is there a possibility to compare mortalities of different cities with similar living standards but vastly different PM 2.5 index to analyse and better understand the impact of air quality on mortality?
Absolutely, I'd love to do that. That sounds...
All right, you're on ICA2023.
It sounds really interesting. I think absolutely is the answer. One of the things that we did consider as part of this, though, is one, the data, and I hate using this as an excuse, but I think that presents one of the challenges when we're looking at these things. That there is, I mean, we've noticed that there are more and more data sets and bigger and more sophisticated data sets that are emerging. So, yeah, sounds great.
Okay, one more question here. How do we balance against increasing mortality risk from climate change against improving longevity driven by medical advancements?
That's a really good question.
I think there's a whole lot of things. I think Michelle's CODA work will maybe look at that. We'll try and weigh up some of these things a wee bit. I mean, I think there's a lot of trends, and we've heard a bit about them the last few days. A lot of trends at play. I think the rising cost of social isolation is a big thing, and I think there'll be lots of indirect impacts of climate change through. I think the term is climate change refugees, but it's not just a refugee in terms of a economically displaced person, but more of a location and community displaced person. So I think if all the trends we see in things like dementia and so on, particularly for females in Australia and the Western world, I don't know, if I had a crystal ball, I'd say it's hard to see that not increasing even more as social isolation and community disruption occurs. So I'm sort of evading the question a wee bit. How do you balance them all? By doing good stuff, I think. Yeah, I don't know.
All right. I think in the interest of time, we may move on now to our second presentation for the morning. So thanks, Aaron and Michelle. That was very interesting.